Welcome to Money Discourse. Today we're discussing the CPI inflation number tomorrow, the Fed's likely interest rate hikes, used car prices are down, Tesla stock price down due to Elon's tweets again, but is weight loss drug behind this? Who knows? Rajan, why don't you take it away?
Yeah, so overall in the market this time, we've had a bit of calm compared to how it's been over this past year. We've sort of settled in a range. We're settling around that 4,000 mark in the S&P. The Fed, again, now we're looking for a 50 basis point hike, which actually would be, believe it or not, just a bit of moderation to the 75 that we've had, like 475s in a row, 575s in a row. So it'll be a bit of time where we can start to see the curve, the overall pace of rate hike starting to taper off, and this is what we're all looking for. And all of this is going to be predetermined a lot by what we get tomorrow. The odds on, we got the Fed rate decision on Wednesday. We actually got, I think, the ECB on Thursday. I think do we have the Bank of England as well? The Bank of England is also on Thursday too. So, we actually have a massively busy week in terms of rates decision. So let me just check in on, so we've got the ECB and the Bank of England and the Swiss National Bank. So we got three major central banks announcing rates on Thursday, and we got the Fed, which is on Wednesday. And preceding all of that is the inflation number tomorrow, which we have an expectation of around 7.3% after getting the 7.7% headline number last time round, which really did give a really nice bounce to the market. So hoping for more of the same this time, especially because we're coming into year end, and we're just really hoping that we can keep on pushing this through. I think we've seen nice bounces in a lot of these stocks like Nvidia, AMD, Apple, some of these. Amazon is a dog, still trading below 90. My two biggest holdings, actually, Amazon and Tesla, happen to be the two biggest stocks that we got right now. So I'm just hoping that we get some type of catalyst to sort of help make this rise towards the end of the year. But gosh, it doesn't look that great at the moment. But let's just just thought we'll look at the S&P right now and see where we actually stand overall when we look at the charts. And we've had this a really nice bounce from this the low that we reached back in October, and then we reached a high of just about, where was this? Just under 4,100, and now we've come back into this range over here. So we're trading just at the upper end of today's of this overall larger range. And if we do stay formed to this chart pattern, then we might go push back towards that 3,500 mark. But what I am hoping for is that we can sort of stay around this sort of support here and bounce back up and head towards 4,200. But again, this will largely be predetermined by the inflation number tomorrow. And if we look at what we had prior to that, we had the PPI numbers back on last Friday, which came in a bit hotter than expected. Here we go. We had the November final demand PPI, which was 0.3%, which was above the 0.2% expected, and 7.4%, which was above the 7.2%. So it did come in ahead of consensus, but it did mark the fifth straight decline in the annual pace, which was the positive. So I think the market took that a bit in their stride. We did see a bit of weakness on Friday, and we saw a rally today. So we'll see if this PPI number has any bearing on the CPI number. But we're seeing prices coming down across the board. I'm seeing it everywhere. We've seen oil almost WTI almost 62 in 69 $60 handle. So nat gas come down. Used car prices. We had a Manheim index, which is a index that tracks used car prices, and then we saw in November the used vehicle price index fell 0.3% month on month and down 14.2% year on year. And I can attest to that because I'm seeing it in real time as well. So the data is showing this. And I'm seeing it on the listing, some of the ones that I'm following. And this Manheim report did note that all 8 major market segments were lower again. And it was the first time this index has dropped below 200 since August 2021. So, what do you see in the UK in terms of used car prices? I'm definitely seeing it lower here. And I actually predicted, I actually sold my previous car, and I think I've got a good price for it, and I'm looking to buy it back hopefully in summer for about 25% cheaper than what it is now. I don't know if we're going to ever get back to the pre-COVID level used car prices, but we're seeing all these reports of massive repossessions. $1,000 a month, $800. I think the average American car payment was something like $700 to $800 a month. I don't think that's really sustainable. It's just massively high inflated car prices. And I think this is huge crash to come, and we're seeing it with the Carvana. Carvana took a huge dump, massive, this last week, went to as low as like 370. We bounced it back a bit, and we're trading around 5. Bear in mind, Carvana was a $250 stock, and they're saying we don't know if they're going to make it or not, but they're trying to arrange deals with their creditors to see if something can, if something happens. But I mean, yeah, this used car market, it's anyway, it's all adding to this narrative that inflation is coming down. And so, I mean, yeah, what are you seeing in the UK in terms of the used car prices?
Yeah, so used car prices in the UK dropped 1.2%, which is obviously completely understandable, where getting financing for cars is just obviously much harder, like we've spoke about in previous episodes. But, we're seeing electric car prices plummeting up to like triple the amount of regular cars. You see that the Tesla Model S and 3, down 6 and almost 7%. You're seeing the same along the lines of these other electric cars that are out there. And yeah, so this is actually really good for those who have been on the sidelines looking for a electric car. Prices have just been nuts, and looking now, it's come down to a bit more affordable levels. Before you could buy electric car and drive it for about 2 or 3 years, and they would sell it for the same amount that you bought it for. Now at least the market is doing the right thing, and demand is obviously coming down. The Fed, the Bank of England did.
You know what? Talking on this point, it's interesting you saying that, because my main worry is we saw this report out earlier, I think this week or over the weekend, that 60% of mortgages or house purchases made in the last year is in negative equity. And I can imagine it's even higher number for the amount of used cars. And new car is a new car. It's the price, unless you paid some massive dealer markup. But with these used cars, the amount of, you expect depreciation on a used car, but the rate of depreciation, because some of these people are paying above new car prices for some of these used cars. So I think that could be a potential headwind for a lot of people, because like I mentioned earlier, the average used car payment is just astronomical, and there's going to be some massive gap insurance needed, with this type of thing. Someone that's definitely going to be having a bit more money is the UK public sector workers. That they've all been striking like crazy, and then we've seen the bus union that represent the bus drivers. They got a 11% pay rise. There was another one today where they got I think they averted strike action with the Scottish Ambulance Union. They got 7.2% pay rise. Meanwhile, Network Rail, they declined the offer put to them for their thing, so they're still striking. But it's incredible, because you got in the UK the ambulance staff, nurses, road workers, civil servants, postal staff, bus drivers, Eurostar employees, and Heathrow ground handlers all planning strikes. Now the bus drivers now have averted that one, but this is all adding to this embedded inflation talk. But, to be honest, a lot of them work hard and they're probably getting paid virtually nothing. So they've got to do what they can do for themselves. But yeah, I know this went on a bit of a tangent, but I was just thinking about who can afford these car payments. And I'm just like, these guys get a bit of a help with that. But yeah, it's just insane with everything that's just going on. And so that's why I think Europe definitely is going to have a bit more of an issue sort of taming inflation than down over here, because it just seems there's a lot more headwinds over there, especially with the gas, and it doesn't look that great, but yeah, so now let's talk about Tesla. Today we had a nice rally in the market. So the Dow was up over 500 points, the S&P was up, I believe, over 50, and then the Nasdaq, the S&P was up over 50. We're trading back above 4,000. The Nasdaq was up over 130. Yet Tesla's down 6 or 7%. And it seems like we've seen Elon really being vocal, trying to bring out all the dirty laundry of past Twitter stuff, all the suppression that happened during election time, the Hunter Biden laptop story, and this and that. But I don't know. It really does seem that is profoundly having an effect on Tesla, because I can't see how Tesla goes down 7% on a day like this when there's no really material news to advocate for this. And so you just have to assume that it's like the institution getting back at Elon, ripping the price of Tesla, trading at a multi-month low or year low. I can't remember the last time it was this low.
Yeah,
in a rising market. Yeah.
It's like around $500 pre-split, which is nuts. Tesla has a lower PE than Chipotle, which is crazy, you know. And you're looking at the EPS growth of Chipotle versus Tesla. You know, it's obviously chalk and cheese, and well, you know, this is crazy. And the clearest evidence to date that Tesla is trading on issues outside simply macro. You see, like you said, everyone going up and down 6.27%. That is just insane.
And like you said, Elon just doesn't seem to give a shit.
Yeah, he doesn't care.
He just doesn't care.
Yeah, it seems like he doesn't care. The perception is he doesn't care because all he's tweeting about at the moment is issues to do with Twitter. And some of those are important, but you know, he's actually put the priority as number one to kind of defeat the woke mind virus. But to be honest, for me being a long-term Tesla shareholder, you know, I get the move to sustainable energy. I understand why SpaceX needs to get to Mars. I understand Neuralink. I understand Boring Company, and I understand all his ventures. I do understand Twitter, but what is this woke mind virus? You know, what's the definition of it according to him, and why does it need to be defeated so decisively for the future of humanity? I don't understand that right now. So Elon Musk, you probably saw that picture of him topless on holiday a couple of months ago, and since then he's been on this weight loss drug called WeGovy by Novo Nordisk. And if you look at my Twitter, I've been saying for a couple of weeks now, you know, what are the side effects of the WeGovy that he's taking? You know, do you think it's having an effect on him? Potentially it could be, because I've done a bit more digging and I went onto the Mayo Clinic and looking at the actual side effects, and it says that this medicine may cause some people to become agitated, irritable, or display other abnormal behaviors, and even cause some people to have suicidal thoughts. Now, all drugs obviously have their side effects, but I'm just wondering, how is it affecting Elon Musk? Does he have some kind of side effect that is causing him to... obviously, he's been very, very dedicated to any project that he works on, and he kind of gets this, you know, extreme focus, and potentially he might have this extreme focus now on Twitter, and it's kind of just taking his attention away from pretty much everything else, Tesla included. And you know, he's using Tesla as a kind of, I guess, piggy bank for Twitter, and I guess that has got everyone scared. So exposing all these things on Twitter, that which he's been doing with these Twitter file dumps that he's been providing to these journalists. Yeah, okay, fair enough. A lot of this corruption needs to be outed, but at the same time, you can show a bit of love to Tesla, and just showing a bit of love to the company and the stock, you know, might go a long way. And I'm wondering if WeGovy is having a slight effect on him. So, I still fully support him, but it's just the way he's going about things seems very questionable.
Yeah, it definitely just seems like there is a real agenda. And the thing about it is, most of the people that buy in Tesla, a lot of these are the ones that he's all going against. It's these people, the people that seem to be the most happiest by everything he's saying are not his clientele, basically. But it doesn't seem like it bothers him. Yeah, but we don't know that. But the thing is that you look at a lot of where all the Teslas mainly are. It's in California. It's all these tech people, all these green people that, environmental people. We've seen numerous charts about the donations given by the tech companies, what percentage, it's predominantly democratic. And we've seen him say before as well that the election, you need to divvy it up a bit. Now the Republicans got the House, the Dems got the Senate, and you need that equal balance of power for checks and balances. And we've seen this all before. But again, I just don't understand, like you're saying, and what is causing it. What is his end game with releasing all of this stuff? This Hunter Biden thing, yeah, I get it, right? They suppressed it, but what is it? Like, it's dick pics. I don't know what was in it at the time Trump was president. I don't know, all of this type of thing. And the thing is, it's like corruption just runs deep both sides. And I understand he's trying to say, well, look, this side has got the corruption as well, but it is what it is. But it just seems relentless. And the whole point is, it clearly looks like the powers that be, the hierarchy, the Illuminati, whoever the ones that run everything, they're just like, all right, Elon, you want to play this game? Go stuff you, and this is just what's happening. I mean, on a day like today, you would never see Tesla down 6% on no real news, no catalyst, on a market that's gone up this much today. Like, there's some serious money exiting the stock. And but at the same time, like Kevin said in that thing, it provides a great opportunity if we believe fundamentals are going to win. And now with China, people might have noticed that I was going long Alibaba, went long Baidu, when those stocks were getting absolutely pummeled because of the crazy China lockdowns and insane COVID policy. And now clearly they got a bit of a reality check. We've heard reports that they got spoken to by a lot of the major companies in China, and then that led to a U-turn in their harsh rhetoric. And now they've sort of softened up that stance. And that's why we've seen China rebound over 50% from the lows, which is insane. KWEB, which is the internet ETF, has gone from a low of 18 to 31. That's a 60% rise. We went Alibaba 58 went to 95, and we've seen huge rises because this huge macro dampener on these stocks has just got lifted somewhat, and you've seen that spring bounce. So I'm hoping something similar happened to Tesla, but the thing is, this ain't a country that's doing the suppressing. It's just one guy in his crusade, and it doesn't seem like the crusade is stopping anytime soon. So I don't know how long it goes before the fundamentals, when people just say, all right, this is now looking crazy. Yeah. And what happens in this time, you also see all the negative articles all coming out, people all coming out with Tesla still too expensive, it's this, it's that. And maybe when we get too much of that bearish rhetoric, that's when we get the bounce. But
I think that Tesla are going to surprise with Q4 in China. Looking at the numbers, they've never done better in China. You're looking at the numbers of, actual vehicle sales in China are declining, and obviously Tesla are kind of growing their market share at the same time, which is good. Also, in terms of Q4 numbers worldwide, I think they're going to hit somewhere around 430 to maybe 440,000 deliveries. I still think that they're going to have a bit of inventory on hand, and it depends on which way the media wants to spin that. But I think that they're still doing phenomenal for, if you just compare it to the other legacy automakers, which have their, sales numbers declining, like VW in China and all of that. No one is still catching up to Tesla. If you saw a real threat to Tesla in terms of their sales, the sheer volume of EVs, then there would be something to be worried about. And we'll see that in the Q4 numbers. But I think this year is going to be pretty bad for Tesla unless we have something good happening with the CPI numbers. Morgan Stanley have put possible scenarios of what could potentially happen tomorrow. If we have a CPI reading of over 7.8%, we're going to be down 5% or so. And hopefully we just hit expectations of 7.2 to 7.4%, which will have a 50% probability. Then we'll have a kind of green market going.
That's what we had in the last. We had a 4%, 5% move in the last reading because we had this. So
and I think that's the only thing that's going to really help Tesla in the short term. Otherwise, it's going to be a bit of a dog until Elon. All Elon needs to do is just tweet some good stuff about Tesla now. Leave all the sensationalist tweets behind. I'm not saying that he shouldn't do it. He should do it, but just sprinkle in some good stuff for Tesla. And institutions, they don't want to have all of this craziness. So hopefully, he puts his hat on properly, and we'll see something good on that.
Well, let's go. I mean, it's December 12th. We got about half a month to the end of the year. What do you say? Higher or lower than we are now? Do we Santa Claus rally into it? I guess largely a lot of it is dependent on tomorrow's data, but we've had a really good bounce from the lows. So, I mean, there's still definitely room for maneuver to the downside, but I do think the markets are, have bottomed. Like I could see us maybe going lower a little bit, but I think we have bottomed. I feel like the downside catalyst is not as much. We've seen too much evidence of deflationary things, but I mean, I think the biggest thing is the food. I mean, that's where most of the inflation is, but with these energy prices, they've all come down so much, so it's only a matter of time when they filter through. So I do think we're going to at least hold station to slightly go up a bit. These tech companies, though, we've talked about it. They're the main ones under pressure right now. I mean, Facebook, they've got sort of more antitrust with in the EU in regards to the way they collect data. That sort of was a drag on Facebook. It fell 5% that one day. So they're doing the Apple model now. They're saying it in the whole of the EU, like you can't harvest the data the same way. So they're still having a bit of an issue. We're seeing certain hiring freezes along the board, but
And also,
I mean,
we've got the Microsoft Activision deal, which might be put on ice. Warren Buffett had a huge position in that, thinking it was arbitrage, and then he cut a certain amount of it. I think it was 20% or something like that. But now it looks a bit more uncertain. But the thing is, Microsoft have done all of the things necessary to try to calm down the regulators by giving Sony a 10-year licensing deal on Call of Duty. I think it's going to go through.
It's how much do they have to give up? How much more do they have to give up? Like, what do they need more to appease the regulators? So that's it. But I mean, I think a lot of the catalysts now, there's not really that many more left for the rest of the year. We've got the CPI and don't forget the 3 rate decisions. Yeah. But with the Fed, I fully expect it to be a 50 basis points. Bank of England, I don't even know what they're expecting, probably 50. I think in the last meeting, there was some calls for 25, but I reckon it'll probably be 50 because UK still got double-digit inflation, and Europe as well is most likely going to be 50 or 75. So, I mean, we'll do a update end of the week after, and dissect the 3 rate decisions and the CPI print. So a lot to talk about come weekend, and hopefully, at least we just get volatility and just stay here or go a little bit higher. That would be my ideal scenario, Yeah. And
I just want it. I mean, I'm not going to pray too hard for it to be way lower than expected, the CPI print. I just want it to be at expectations, and then hopefully, Jerome Powell and his buddies understand that sometimes you have to give these rate hikes a bit of time to work through the system, and just calm down. 0.5% as expected. Just keep everything as expected, and we should hopefully at least have that stabilization, like you said, Rajan.
Yeah, well, please like and subscribe if you like what you heard. If you're on the WeGovy, take it easy.
Yeah,
explain to the wife and girlfriend that it's not my fault; it's the WeGovy.
Yeah. Thanks again for watching. We've had a lot of interest in our channel over the last few videos that we've done. So if you can just hit subscribe, leave a comment, anything you want us to look at in the future, we'll be happy to do that for you. And we'll see you guys in the next one.